2023 was supposed to be the year where India focuses on the renewable energy sector, meeting ambitious goals that were set almost 2 years ago at COP26. However, the power sector underwent a transformative journey marked by unexpected shifts and ambitious goals. The landscape changed dramatically as the demand for power surged in 2023, prompting a recalibration of nation's energy strategy. Moving from goal of phasing out coal to ramping it up, power demand in the peak season hit a record high with 240 gigawatts in September. This was due to a number of factors, but primarily the El Nino effect, lack of adequate rainfall and a second summer. This led to a peak power deficit as well, and so we relied on traditional thermal source of power generation. The Power Minister highlighted the urgency, stating that India needs an additional 80 gigawatts of thermal power capacity under construction to meet the escalating power demand. And this is only expected to get bigger as the power demand is expected to surge to an all-time high of 255 gigawatts in just the next year. To put this in perspective, India's total power capacity stands at 426 gigawatts, with over 50% coming from thermal sources. The plan is now to add 80 to the current 239. Booming demand for coal catapulted shares of Coal India and NTPC into the spotlight. The thermal power generation companies that were once considered as slow-moving giants became hot stocks this year. NTPC outpaced the broader market with a 78% surge. Stock that was at about Rs 165 in January 2023 is now over 305 rupees a piece. Along with NTPC, Coal India too marked its best year yet with almost a 60% increase. At the start of the year, it was at about Rs 218 and now it is at about 356 rupees a piece. With industry keeping an eye on the net zero by 2030, a promise made 2 years ago at COP26 by India, this year marked a revival of many companies in the sector. The star player from renewables this year has been Suzlon Energy. Shares of Suzlon, which hit a bottom at around Rs 7 at the end of March this year, have witnessed a remarkable turnaround. The stock price is currently at around 37 rupees a piece. This shows a rise of about 300%. In essence, once considered a penny stock, it has transformed into a multi-bagger in less than a year, standing strong as a testament to the growing investor confidence in India's renewable energy sector. Another star performer came in the form of IREDA, a government-run finance company focused on renewable energy. The stock listed at a premium of 56% and continued to soar, giving almost 200% returns to its shareholders. The government, cognizant of the need for innovation in renewables, introduced the scheme for viability gap funding. This includes substantial financial support for the development of battery energy storage systems or BESS, aiming to reach about 4,000 megawatt hours by 2030-31. This funding is worth over 3,760 crore rupees. Along with BESS for round-the-clock power plants, an emerging theme has been pumped hydro storages. NHPC plans to invest Rs 1.7 lakh crore to establish pumped hydro power storage capacities of about 20,000 to 22,000 megawatt across India. India's installed renewable energy capacity is set to soar to 170 gigawatt by March 2025, a significant rise from the current 133. This, as the Power Minister has suggested, will be through both public and private sector investments. As India grapples with the dual challenge of meeting immediate power demands and aligning with global green energy goals, the nation's power sector stands at crossroads, navigating a delicate balance between tradition and transformation.